Take a look at this chart. It shows us every instance where short-term Bitcoin holders have been selling at a loss. And this spike right here tells us that these investors have just taken a massive $1 billion in realized losses on Bitcoin. We've only seen losses of a similar magnitude 6 other times in the past 10 years. If we put Bitcoin's price on top of this chart, we can see that all of them occurred near short-term bottoms. And while 3 of them proved to be incredible buying opportunities over the next 6 to 12 months, the other 3 saw Bitcoin roll over and decline much more after the initial bounce. Today, Bitcoin is once again bouncing off its local low around $80,000. But the risk here is that short-term holders use this bounce to exit their positions, which could open the door for a lot more weakness ahead. After all, if we look at the total unrealized loss across the network, the number now sits at about $160 billion. This is a level we've only seen heading into the 2022 bear market, when every bounce was sold into and downside pressure kept intensifying. A similar 75% decline today would take Bitcoin all the way down to $30,000, which is why it's now more important than ever to determine whether we're dealing with a buy-the-dip correction or the early stages of a much deeper bear market. Because the truth is, if this does evolve into a typical Bitcoin bear market, it could make the recent decline look like child's play. This is exactly where we like to use a dual-factor framework at Bravos Research to help us evaluate the macro and fundamental conditions for Bitcoin. By the way, make sure you do not miss the Cyber Monday discount. There's only a few hours left, so make sure to capitalize on it. The reason we publish research like this on Bitcoin is to help as many traders as possible to take advantage of the large moves in cryptos without getting caught in the hype or fear that the market often goes through. We've sent multiple crypto trade alerts to our clients at Bravos Research throughout 2024 and 2025, and it's made up some of the biggest trades that we've had over this period of time. We've had multiple great trades on Bitcoin, Ethereum, Solana, and other altcoins. The gains that cryptos can offer when momentum is strong can be spectacular, but there can also be a lot of downside that can completely wipe out traders. This is why we have an extremely strict risk management framework to keep our losses limited to single-digit percentage points. This has helped us sidestep some very large crypto drawdowns in the past. To follow each and every trade that we take, make sure to take advantage of our Cyber Monday sale, because as we're going to see, Bitcoin is about to get very interesting. The first key factor is monetary policy. We already know that the Federal Reserve has ended quantitative tightening, something we covered extensively in our recent crypto video. But there's another potential catalyst just days away. Next week, the Fed will announce whether they're keeping rates steady or doing another round of cuts. And this matters because falling interest rates reduce borrowing costs, ease financial conditions, and lower the discount rate, all of which push capital toward risk assets like Bitcoin. If we put Bitcoin on top of this chart, we see that the only other proper rate-cutting cycle it has seen was in 2019 and 2020. And while there was some short-term volatility during that transition, it turned out to be one of the best 6 to 12-month buying opportunities of that entire cycle. Right now, markets are assigning over an 85% probability of another 25 basis point cut this month. And since 2006, the market's pricing has correctly anticipated the Fed's final decision in 155 out of 157 meetings, meaning over a 99% accuracy rate. So if the Fed lowers rates again, and we do not fall into an economic recession, then the macro backdrop for Bitcoin is likely to get even more favorable from here. The second key factor is Bitcoin's intrinsic value. This line here shows us something called the electrical cost of Bitcoin, which represents the cost of electricity required to produce a single Bitcoin. If we put Bitcoin's price on top, we can see that over the past decade, Bitcoin has never traded below its electrical production cost, even during the 2018 and 2022 bear markets. And this makes sense. Electricity is the foundational cost for mining Bitcoin, which typically sets the lower boundary of Bitcoin's production economics. Today, that cost sits at roughly $71,000, which we think should function as a floor for now. Of course, as electricity prices change over time, this level will adjust with it. Now, even though electrical cost gives us a worst-case baseline based on the current data, it's only one part of the equation, because producing Bitcoin comes with many additional expenses, like hardware, cooling systems, and and operational overhead. That's where this next chart comes in. It compares the price of Bitcoin relative to its total production cost. A reading above 1 means Bitcoin is trading at a premium to its production cost. A reading below 1 means Bitcoin is trading below the cost of producing it, which historically only happens during severe market stress. And a reading at 1 means Bitcoin is trading right at its fundamental cost basis. We can see that since 2019, this ratio has rarely fallen below 1. And every time it has reached that threshold, Bitcoin has soon repriced higher as the market recognized it had reached its fundamental value zone. Today, we're once again sitting right at that 1 threshold, suggesting that from a fundamental standpoint, Bitcoin is back at a major area of intrinsic support. So when we combine the improving monetary backdrop with Bitcoin sitting right at its fundamental production cost floor, it creates a very different picture than what short-term price action alone would suggest. And that might explain why Bitcoin demand from smart money is actually rising, despite short-term holders selling at a loss. This chart shows the total smart money demand for Bitcoin over a 30-day period. A sharp increase in this metric, like what we're seeing today, reflects strong and sustained buying pressure. In fact, we've only seen such an aggressive demand surge 2 other times in the past 10 years. If we put Bitcoin's price on top, it becomes clear that both of those occurred in the middle of a bull market, rather than at the beginning of a bear market. This tells us that we may be witnessing a major demand reset right now, meaning lower conviction holders are exiting, while stronger hands are stepping in, at a time when the macro and fundamental backdrop has turned extremely constructive for Bitcoin. So as long as this transition continues, we think the path ahead is likely to reward patience far more than fear. By the way, if you have not taken advantage of it, do not miss the massive discounts that we're currently doing on our service for Cyber Monday. This is our biggest sale of the year, where you get access to our entire premium membership for a fraction of the price. You'll get each and every one of the trades that we take in real time. We pride ourselves on being extremely transparent regarding our track record of our winning and losing trades that you can check out on our homepage for free. We rarely do offers like this, so make sure you don't miss it.